Hello friends, I'm Ravi Somani. I'm a chartered accountant. Today's video will be discussing on one of the very important topics, that is difference between 26 AS and service tax returns. Lot of notices are being issued merely on the reconciliation differences being noted between the TDS records submitted under income tax vis-a-vis the ST3 returns, that is the service tax returns filed under the service tax law. Now, especially these notices are being issued in this financial year before April 30th of 2022, because the time limit of 5 years, that is a limitation period given the service tax law, is being expired on April 30th, 2022 for the period October 2016 to March 2017. That is why there is a flood of notices coming in on this particular aspect for the differences that's there. Now, the funniest thing of these types of notices is that uh, they are effortless. Department does not go into putting any efforts in understanding what is the taxable service, whether at all it is taxable, and what is the activity that has been undertaken by the taxpayer. On a very flimsy grounds, the notices are issued on a very assumptions and presumption that it is taxable, merely because there is a difference between TDS and service tax returns database. So these notices create a lot of problem for a taxpayer. First and fundamental thing is that it creates unnecessary frivolous litigation, because while the very demand is created without nobody knowing what is the character of tax that is leviable on this particular demand. And second, let's say if these cases get confirmed at the first level, that is at the show cause notice reply level, if it gets confirmed, then when an assessee needs to file an appeal, even at the first appeal stage, they need to remit or deposit, make a pre-deposit of 7.5% of the tax dues, which just blocks the working capital of a taxpayer, which could have possibly been used in the business. Now, without going into the merits of the matter, in this video, I would like to share certain important judgments to understand whether the notices issued in this fashion, whether they are valid or whether they are legal and proper. So first and foremost important aspect is a landmark Supreme Court judgment in the context of Brindavan beverages. Now, it is important for us to understand that a notice which is issued without being specific, being absolutely general, is vague and illegal. Now let me just bring out what exactly Supreme Court says. In Brindavan beverages, Supreme Court says the show cause notice is the foundation on which the department has to build up its case. If the allegations in the show cause notice are not specific and are on contrary vague, lack details, and are unintelligible, that is sufficient to hold that the noticee was not given proper opportunity to meet the allegations indicated in the show cause notice, then such notice is invalid, categorically pointed out by Supreme Court in Brindavan beverages. Now, next very important argument that an assessee can take in these kind of cases is that the burden to prove that the amount or the activity carried out by the taxpayer is taxable at a particular rate of tax in the manner claimed by the department is on the department. Onus is totally on the department. Now, by issuing notices in this fashion, department is simply shifting the onus on the assessee. It is like without telling an assessee what is the crime, but claiming that the assessee is a thief. So now again, a very landmark Supreme Court judgment that has been there in this context is Nanya Imports and Exports Supreme Court judgment, where it says that the burden to prove that the liability, that the tax liability is due on a taxpayer in the manner claimed by the department is on the department. Third very important argument that can be taken is that any allegation when the department is putting upon a taxpayer, it must be based on some proper evidence, backed up by some documentation, and cannot be based on mere assumptions and presumptions. Now, this is again a landmark settled jurisprudence. I would like to highlight two, three important judgments in this context. First and foremost is Oud Sugar Mills. It's a Supreme Court judgment that notices issued based on mere assumptions and presumptions are illegal, invalid, and not proper. Flamingo DFS Private Limited, Madras High Court, and CP Technologies Madras Sestat judgment. Now, apart from these fundamental arguments that an assessee can take, another very important argument that can be taken is that in order to levy a tax, department must put it up in the notice as to what is the service on which the tax liability is being charged. Because unless you tell the nature of service, the subject of the transaction that is being taxed, how would one arrive at the value or the rate of tax or the classification? Now, there are two judgments very important in this context. First judgment is Diltax Enterprises, Sistat Delhi. Now, in this judgment, it says that no service tax liability can be fastened on an unidentified service. There is no provision for such summary assumption under the Finance Act 1994. Thus, assessment cannot be extended solely on the income tax return without identifying the specific taxable service. Absolutely applicable in the current facts. Now, the next judgment is more interesting. United Telecoms Limited, Sistat Bangalore. Under business auxiliary service, several activities are listed as taxable. In the absence of proposal in the show cause notice as to the liability of the assessee under a precise provision in the act, the demand is not sustainable, which means merely saying that the activity is taxable under business auxiliary service is also not sufficient. You need to categorically point out which service is the one under which the tax liability is being demanded. Now, apart from these judgments, there are a host of judgments claiming that merely raising notices based on difference between income tax records and service tax records without pointing out the proper nature of service is illegal and improper. Now, let me take you through those few important judgments. Synergy Audiovisual Workshop Private Limited. Now, this judgment says service tax payment cannot be confirmed on the basis of amount showed in income tax return and balance sheet and P&L account. Absolutely applicable in the current facts. Alpha Management Consultants, Sistat, Bangalore again. Service tax cannot be recovered based on the returns shown in the income tax returns, as the provisions of income tax requires declaration of the amount still due from the debtors. It was when the service tax was on receipt basis. Purni adds, again, Tribunal Ahmedabad. Before raising a demand based on difference between amounts in ST3 and 26 AS, the adjudicating authorities should reconcile these figures by adopting the proper methods. So the onus of doing reconciliation activity and raising an appropriate correct demand is on the department. Similarly, there are few more judgments in the same context. Kush Constructions, Lute Developers. Then there is one very good judgment by Kanpur AA Travels Wing Private Limited. All these judgments eventually say that merely putting the differences of income tax and service tax returns, you cannot raise a demand. Now, most important point I would like to put up here now is that apart from all these things, there is an instruction issued by the department dated 26th October 2021. Now, these instructions are issued by the department stating that while analyzing the ITR TDS data received from income tax, a reconciliation statement has to be sought from the taxpayer for the difference and whether the service income earned by them for the corresponding period is attributable to any of the negative list services or exempt services due to any reason. To issue show cause notice only after proper verification of the facts, and principal chief commissioner may devise a suitable mechanism to monitor and prevent issue of indiscriminate show cause notice. Now, this is the instruction issued by the CBIC to its officers, which is binding on them. Now, apart from all these judgments, one another very important argument that a taxpayer must claim is on in the context of extended period of limitation. We need to understand if an assessee was registered under service tax, if they were already filing the ST3 returns, then they already submitted all the details to the taxpayer. There's no question of any fraud, collusion, or suppression of facts. Most importantly, even if let's say they have not filed ST3 returns due to various reasons, the income tax records were already there. So the same notices could have been issued 3 years back, 2 years back, and the income tax records, when public TDS returns 26 AS data was public. So when this information was already there was no question of any separation of facts. And most importantly, when this information was already put up in the books of accounts, assessee did not have any intent of evading any tax payment. If an assessee has an intent of evading tax payment, they would in the first place did not give these details in TDS 26 years data, and most importantly also in the audited books of accounts. So these are a few of the arguments which a taxpayer can claim without going into the merits of the matter on very legality and validity of these notices issued based on differences between 26 AS and service tax returns database. So I hope this video was helpful to you in contesting these matters. Thank you very much for your time.